for those who have an S corporation, there's something called the accountable plan. But what that is the reimbursable plan. And it really is just a piece of paper saying you're going to reimburse yourself or your employees for things that you couldn't really pay directly from the business. An example is a home office deduction. You can't really pay your real estate tax and your utilities and all these mortgage interest from your business account, pro rata, whatever. So what you do is you say, well, I do have an office. I'm sitting in my office right now, even though I have this green screen on in my home. I actually rent an office too, but I find it more comfortable to be at home. So this whole room here that I'm looking at is completely basically mine for the office. I got some exercise equipment, I got a table, and it's a complete room. Even has a bathroom. But I want to get a business deduction. So what I do I have an S corporation, you cut a check for the pro rata amount of what that home office cost you. So I have, in my case, I have real estate tax, I have utilities, I have insurance, and then you also have to look at how much you paid for your house, depreciation, and you take, let's say this room is 150 square feet or 200 square feet over 2,500 square feet. So whatever that percentage comes out to be, a lot of times it's like let's say 10% of your home is your office. So if your total expenses overhead to run your house was $50,000, so 10% of $50,000 would be $5,000. And then if your house was $500,000 and you take a 27.5-year depreciation, some people do the 39-year depreciation because it's like a corporate office now. 27.5 years is for residential, but if I'm talking about this is a business office, so probably 39 years, which is makes it a little bit worse. But anyway, you figure out how you're doing your depreciation, and boom, let's say $5,000 depreciation. So my deduction or my reimbursable amount is about $10,000. And what you're supposed to do is from your S corporation business account, you send a check to me personally, from my business to me personally. Do it once a month, do it once a quarter, have some backup for how you calculated that, and you reimburse me. I'm an employee of my S corp, and you take a deduction for it. So it's called a reimbursable plan, and you want to do that throughout the year. Now some people don't do it right, or they didn't do enough, and they have to true it up or true it down if they did too much, and that's something we do at the end of the year, and that's home office. Your auto is not being listed on your business sometimes because your business didn't buy the vehicle, or whatever, you bought it years ago. Well, if you track your miles and you track the usage of your car for your business, you can take a deduction for that, either actual or miles. Everything you do here, by the way, you have to log what you're doing, because the IRS, if they ever ask you, they're going to ask you, well, where are you going? In my case, how much do I use my car? I run to the post office sometimes to mail in tax returns or payments or whatever. A lot of times I'm going to see clients. They want me to come to them, so I'm doing that. I actually have another business, not a big business, but it requires me to drive around, make deliveries and who knows what. So I'll take a deduction on that business. So you got to track your miles. So in a reimbursable account, you can reimburse employees, not just owner employees, any employee. They submit to you some kind of accountable plan expense reimbursement sheet, and then you look at it and you say, okay, I approve it. I'm an officer of the S corp. I approve it. Here's a check for $422. The key is, don't send a reimbursement for like a very round number every month, like $500 every month, because that's a non-accountable, because you're not accounting for anything. You're not reimbursing specific. You have to reimburse specific for accounting, for expenses. Same thing with your office, your home office. And a lot of clients do this. They are either lazy or they're just uneducated, or prospects do this. They'll just do, well, a home office is about $1,000 a month. That's what I would pay anyway in rent. So they just cut a check for $1,000 every month. The problem is you're not reimbursing specifically for the expenses that you incurred. So that causes a problem. We used to do it in the olden days where, okay, well, it's not a reimbursable account, but so now you're going to have on your personal return a little home office rental, and you'll have $12,000 of rental income because I paid myself $12,000 rental income. And then from there, you can take a pro rata of your mortgage interest, your real estate depreciation, and real estate taxes and utilities. But that actually doesn't work a lot, like so well, because you end up having a little bit of extra income there. And that's another way. It's called a self-rental. But accountable plan works so much more seamless if you just follow the plans. You follow the steps. You follow the rules of what that means. And you're reimbursing for specifics, very specific.